Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Monday, and it looks like we have a pretty big sell-off in the market. The market has pulled back, and it looks like this bear rally might be ending. And interesting thing happening. I'm just going to show you the S&P 500 Spider, which is this is the ETF that covers the S&P 500. I want to show you how much this has pulled back. So that you can kind of get an idea of what's going on here. You'll notice that it came up to the 200-day moving average, and basically last week it kind of stalled there, kind of expected that, and definitely pulled back. It's below the 10-day line, it's below the 21-day line, and it is looked like it is reversing lower. Currently the relative strength is 62, so basically we're starting to see the end of this bear rally. Now, in a bear market, which we've been in, sometimes they have these upward trends, and we've been in one basically for about the last, I would say about 6 weeks, but that has changed, and the market has definitely moved to a different, it's moving to a bit of a different drummer. The Dow Jones is off basically 1.98% today at the close. S&P 500, as we were talking about, that's down a little bit over 2%. Nasdaq is down about 2.5%, and the Russell is down about 2.2%. So as you can see, we definitely have pulled back in the market. Now, interestingly enough, there's again movement out of tech stocks into some of these stocks that are more related to oil and gas. Oil and gas is definitely leading right now. That is where the action is, and it seems like we're getting a flight to safety. Just want to point out a stock that I don't own yet, but I'm very interested in possibly adding to, and I did add to 2 stocks today. It's ConocoPhillips, probably well known to most people. It is a large integrated oil company. COP is the symbol, and the interesting thing about Conoco right now is that it is basically in this consolidation formation with a relative strength of 96, making it in the top 4% of all shares being traded currently. It's up today. Volume is lower, and it's up after hours. Primarily, part of the reason for this, I believe, is the demand for gas, especially in Europe. Up until very, very recently, natural gas was essentially a domestic commodity here in the United States, but with the addition of facilities to liquefy natural gas and ship it, it has truly become an international commodity, and this is I think, creating some of the demand in some of the stocks that are heavily in the gas area. I did add, Conoco, of course, has a large gas presence. Now, as you can see, if you take a look, and I don't know if you can't see this on TikTok, but on YouTube, you're going to be able to see this. You're going to see how much better ExxonMobil, COP, which is ConocoPhillips, has performed than Chevron, Exxon, or even the XLE. So this is an interesting phenomenon, and this is one I definitely think that you could start possibly accumulating this one. I don't own it currently, but it is looking pretty good. It's got a 78 checklist, which is very good, and it is below the buy point. The buy point being basically 124.08. Currently, it's at 105. So it possibly is a place where you could start moving into the issue. Currently, it's only about 3%, about 4% above the 10-day line. This is not a bad place to buy it. 101.21 is where the 10-day line is, and we're just a little bit above that. And I do think that we are likely to see a strong movement into some of the oil and gas names. Here's currently what I'm holding. I've got 6 positions. LNG, of course, this is the one you probably heard of this one. This is a company called Cheniere, based in Houston, Texas. It is a unique company in that it is one of the first companies to, at least in the United States, since it's been allowed to liquefy gas to foreign markets. And Cheniere has two natural gas facilities. One of them in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas. And this is liquefying a lot of natural gas. Now, prior to companies like Cheniere, natural gas was essentially a domestic product. It really couldn't be shipped beyond where the pipelines were. So, about natural gas, it tends to be the main fuel for electricity. So, with part of the reason that we are experiencing higher gas prices is because now this commodity is available for export. As you probably know, in Germany, they are in a very bad way. They've had some of the highest electricity costs in history. They unfortunately shut down a lot of their generation capacity due to global warming concerns. They shut down pretty much all the nuclear plants, as well as many of their coal-fired plants. They're going to have to restart them because they are in a situation where they now have the highest energy costs in Europe. And that is causing social problems. People are not able to, they're blackouts, and they can't use electricity. Up until recently, the power in Germany the gas has been provided by Russia, but of course they have cut off that facility due to the war in Ukraine. So this is an interesting area of down a little bit, and unfortunately this one is extended, so this unfortunately is not available. It's up after hours, but I've been building up my position in LNG. The other company that is of interest to me right now is PBR. It is not Pabst Blue Ribbon. It is Petrobras, and this, of course, is the Brazilian national oil company. Again, extremely large producer of natural gas as well. This one is quite. It's above. Unfortunately, it's extended as well above the buy point, but very inexpensive stock, $13.93 a share. So, kind of an interesting stock if you are interested in this one. It is the earnings on this are truly spectacular. And I'm going to jump on over here. We had the sales were up 46% quarter over quarter, and profits were up 111%. Basically, the PE ratio of this is 2, meaning that the cash flow, you basically get back your investment every twice. Half your investment every year. So very, very powerful. If you notice in many of the tech stocks, the price to earnings ratio is usually sometimes in the hundreds, but this is a price to earnings ratio of 2, and it's one of the best of the international oil companies. Petrobras, and the symbol on it is PBR. It is above the buy point. Unfortunately, it is not available to purchase either. It's extended. I'm going to give you some that are in range right now. Currently, the relative strength of PBR is 98, putting it in the top 2% of all stock currently trading. So very interesting stock. Another one that I do have a position in, and it's down a little bit today, is Ollie's Bargain Outlet. And of course, this is a discount store. They buy overstocks from Walmart, Kohl's, companies like that, Macy's, and then they resell them. Interestingly enough, the inventory has been building, and in many locations of Walmart, you're seeing Walmart put containers in the parking lot because if they have unsold inventory. As a matter of fact, it's odd. You can get things like barbecues just because they have not sold. The market, the overall retail market has been falling, and it's been under a lot of pressure. But I do have this Ollie's Bargain Outlet symbol on this is OLLI, and it is a little bit right now. It is not in a buy range right now. It's right below a consolidation, but it is coming up to that, and there is a buy point on it. Actually, let's see if I can get it for you, everybody here. Hold on. The buy point on that one is 72.27, and we're currently at 64.68. I may be trimming the position here. This does not have this is fallen in terms of its checklist, and so if I don't get a bounce on this one, probably will be reducing my position on Ollie's Bargain Outlet. The fourth position I have, and this one actually is doing quite well. This is a company called Celsius, CELH. It is an energy drink company, CELH. They just got a distribution deal with Pepsi, and that was very significant in terms of their market. Again, it's trading in the top 2% of all stocks right now. Remember back, I guess a number of years ago, Monster Beverage got a distribution deal with Coca-Cola, and it changed the entire company, made them a huge company. I don't know if that'll be the case here with Celsius, but the stock is doing well, and it seems like it is. It's one of these few affordable luxuries. A lot of people are cutting back on a lot of things, but this one they have not cut back on, and their sales were up 37% this quarter, and their profit was up over 1,000%. It's a very interesting company. This one does have a very high PE ratio. Again, this is much more speculative. The PE ratio on this is 410, which is very high, but it does have cash flow, and it does seem to be making some progress. I've definitely been I'm pushing my stop loss on this one, so when this one does pull back, I will be out, hopefully at a profit. The after hours price 103.78. Range Resources, this is also an oil and gas play. This is one I definitely very much like. RRC is the symbol on this one. This again is a sort of a oil and gas play. It's up after hours 35.08. Not up a lot, but it's definitely in a buy zone. This one is viable. The amount of sales were up 182%, and profits were up 429% quarter over quarter on this one. This has a PE ratio of 8, which is fairly amazing. Based in Fort Worth, Texas, and up about 5% today because of the demand that is coming into the natural gas market. And last but not least, on semiconductor, this one does manufacture chips for the automotive industry. It's down a little bit today, about 5%. Well, actually down quite a bit, down about 5% today. But if we go over to the daily chart, we can see that after hours it's starting to make its move up. It's come down, tested the 10-day line, and hopefully it's going to be moving higher. So that's kind of the long and the short of it. Thank you for waiting, and some of the questions. I want to get to some of the questions from TikTok first. And see. Okay, let's take a look. Lithium. Okay, yeah, this one was up a lot today. I am not as jazzed about the lithium plays. The best lithium play right now is Albemarle, ALB. But it's a large company, and it's providing most of the lithium that's actually being used right now. HM. Right, so let's look at lithium. The symbol L T U M. There we go. That's the symbol. Come on. I guess it didn't come up. ITH. Excuse me. And let's take a look for it. TikTok. Nope, I'm not getting it. Unfortunately, I'm not getting that one coming up. All right, let's take a quick question from YouTube. All right, DUST. Let's take a look at this one and analyze it. Really quick. DUST is direction. This is the gold miners. Here's the thing about gold miners right now, and I know this is very strange, but the price of gold has been actually moving lower. You wouldn't think it would be, because supposedly it's supposed to be the ultimate hedge against. It's always supposed to be everybody touts it as the ultimate inflation hedge, but it's not really. The ultimate inflation hedge is oil. Oil is what you want to own. You want to own commodities, and an inflationary period, you want to own oil. You do not want to own gold for a lot of reasons. But this one, the 2X miners. It's up a little bit today. I am not on this exchange traded fund to 3 times the inverse performance of the gold miners index. So this is actually a bear ETF. I don't know. I'm of two minds. It's a little bit. I probably wouldn't be in this one. Let's just take a look. I'm going to look at how gold GLD. That's the ETF for gold miners. That responds to the price of gold. Let's see what that one's doing. Yeah, and it's in a downward trend. We all knew. It's in a downward trend. So potentially you could buy BUST here, but I'm not as interested in it. A better bet, I think, a better play here is not on gold. It's on the interest rate. It's a ETF called the TBT, and TBT basically what it does is that it's inverse of the interest of the bond prices. And as you know from college finance, as bond prices go up, the value of the bonds go down. So we've been seeing a increase in the rates on bonds, and so this one is the inverse of this. This will go up in sympathy with this. So this is one I definitely think that you could. This is a better bet than gold right now. And it's called the TBT. That's one I think you might want to take a look at. Also, this has options on it, so you could buy calls on this. I do believe the TBT is going higher. I'm going to show you the weekly chart here, just really quickly. And as you can see, we're in this consolidation coming up here to this pivot, which is at 29.56, and this is actionable. Again, this is in the top 4% of the market. So as the market goes down, this one will go up. So it's not a bad place to be. So instead of doing DUST, probably, at least for my understanding, I think your better bet here is to look at the TBT. And this is basically tied to rates. As interest rates go up, this one will go up as well. And so that is, I think, probably a better bet in terms of in terms of something to buy. TBT is the similar one. So just putting it out there for everyone that might want to take a look at it. That might want to take a look at this one. All right, that's a good question. Hey Jim, should we think about putting a bear put spread on the Qs or on the spider? Good question. That's a very, very good question. Because I do think we're going lower on both I think we're going lower on both the Qs and on the spider. I think it's easier. There's other ways I think we can go. One of them is called the UPRO. I'm not in the UPRO currently, but this one I do think this. I'm sorry, not the UPRO. Excuse me. The SQQQ. I want to take a look at this one real quickly. It's starting to trade up a little bit. I don't know. I'm really of two minds here. Whether or not you want to do that. The SQQQ is starting to move higher, and the relative strength line is starting to move up. So that is indeed a good thing. I'm not currently in this one. I'm just basically sticking to more of the contrarian positions, more in oil and gas and that kind of thing right now. That's sort of where I'm sticking. I'm just sort of being relatively neutral in this one. And if I'm doing anything here, I'm looking at the TBT, because I think the TBT, basically, because of the way it runs with the interest rates, I do expect we're going to get higher interest rates. I mean, I think that's inevitable. And so the TBT will appreciate. Everything else will go down, but the TBT, not so much. All right, let's take a look at AMR. And this, let's get AMR. AMR. And this, interesting. Okay, this is Metro. This is a coal play, which is interesting because those actually have been some of the better plays in the market. So very interesting that you would put this up. I'm not currently in any of these coal plays. I mean, they're very thin. They're very thin, but there's lots and lots of demand for met coal and for regular coal. By the way, there's two different kinds of coal that are mined. One of the met coal that's used in steel production that has been a good export market on that, and then the other one, of course, is the regular brown coal that's used for energy generation. And this is starting to see a resurgence. A lot of this is being exported to Germany because Germany has had to restart their coal-fired power plants in order to meet demand. So, and of course, they're trying to reopen their coal mines, but most of their coal been closed. So, interesting situation there. So, potentially good profitability on that. I'm not in AMR, and as a matter of fact, let's take a look. Let's take a quick look at the areas of the market. Well, let's go get a few more oil companies. Very good. Thanks, Farouk. I think that BP is an excellent choice here. They have BP is basically again one of the big integrated oil companies, one of the very largest in the world, of course. And it's looking good, but I think there are better bets than my feeling is right now the stock to be in is not BP, but the emerging stock to be in, I believe, is ConocoPhillips. That's my take on it. I think Conoco is better set up than BP is. It's a little bit more expensive stock. COP is the symbol, of course, for ConocoPhillips. This one I do think is outperforming BP. And what I'm going to do here quickly is I'm going to compare them. I'm going to compare BP to ConocoPhillips. So there's BP, and let's put BP now. There we go. All right. So if you look at the differences between them. And I really appreciate this question. I think it's a very good question for it. But as you can see, at least in the last month, ConocoPhillips is doing it over the year. ConocoPhillips has outperformed BP. They're both basically in the same trend. So, I mean, potentially, in terms of percentage increase, they're probably interchangeable. But if I were to buy either of these, I would probably err on the side of ConocoPhillips, and the reason is because it is coming in. It's coming in this consolidation base here, which is a good way to buy. Yeah, it's a cut base, and then it's going to pull back a little bit, but I do think that this one is looking very strong right now, and I do think it's set up very, very well. I think it's better set up than BP. So this is what I do recommend, as opposed to BP. I would recommend ConocoPhillips COP as being the better of the two. They're both good. I mean, I'm not in no way indicating that BP is good, but I would recommend COP here, and that, of course, is ConocoPhillips. So, oops, there we go. So that's the one I kind of do recommend out of these two. So let's take a question from TikTok. All right, thank you for holding. LT. All right, let's see what it follows those. Thank you very much. Thank you for joining. ITHM. We want to look at this one again, yes. ITHM. LTHM. Hopefully get this one right. Well, it doesn't seem like it. Yeah, there we go. Livent Corporation. Produces lithium for applications. That's really good. Okay, so let's kind of switch over and show this chart for everybody on TikTok. This is this is the chart for lithium, ITHM. I think that's right. Yeah, LTHM. Boy, why it's sun LTHM? Okay, let's put that up there. Okay, so this is the chart for lithium. Here, I want to compare it with Albemarle, which is the number one producer of lithium in the world. So let's put Albemarle on their ALB, and let's kind of compare them to see which one has done the best. Now, they're both lithium plays, but I think if you look at here, Albemarle has produced a little bit better results than lithium. Not that lithium is bad, it's just that Albemarle is better. Now, the thing about Albemarle, of course, is it's a much more expensive stock, a larger company, but I think because they don't mine just lithium, they mine a lot of other things too, and they're actually supplying the battery manufacturers. This isn't blue sky. They actually Albemarle actually does have working mines that are producing products, so that's very important. Also, Farouk indicated that he's looking at GLG. This is a very good company. This is a shipper that is shipping refined gas primarily from ports in Texas, because of course LNG, which is Cheniere, has built factories that are able to liquefy the natural gas now, and so some of these shipping companies like GLNG are now taking advantage of that. But this is in a very good area. This is right in the buy zone, so I definitely think you could. I definitely think you can. GLNG is viable currently. I don't think it's in the right area of the market, at least for right now. So GLNG is viable now. And one of the advantages of this, it's in the buy zone. It's above the. There we go. GLNG is viable now. It is in the buy zone. The buy point on this one, 27.53, and the symbol on this one, of course, is GLNG. It's called Golar LNG Limited, and a fleet of about 15 vessels, and they've had some very, very good results. The relative strength of this is 99% of all stocks currently trading right now. This also has a 100% checklist, so this one is definitely technically a buy right now. So you can definitely buy this one right as we speak. So if we were looking, if we were looking at both of these, I would say that GLNG is definite buy. I think you want to be a little careful with the oil companies, and if you're looking at BP, I would also look at ConocoPhillips. Very similar company, but ConocoPhillips is a little bit better setup in terms of that to buy. So very interesting there as well. All right, so let's look at CRK. Let's see what's going on. And let's go to CRK. Comstock Resources, of course, this is another oil and gas play. Oil and gas have really been, as the market moves lower, you're going to see some of these oil and gas plays do very, very well because of the inflation situation. Again, in the top 1% of all the stocks currently, and so it's looking fairly good. Is it viable? Is it in the buy range? You could buy it here. This is primarily natural gas. So again, the natural gas companies are doing very, very well. The domestic natural gas is probably right now the best place in the market to be invested because of the demand. Finally the capacity to liquefy the natural gas and ship it outside the United States. And for so many years, natural gas has essentially been a domestic product, with basically the primary supply going to electricity. That's no longer the case with the facilities that LNG and Cheniere and some of the other companies have, allowing the export of this. So natural gas is becoming the primary area of the market. Let's take a look at the price, the actual commodity price of LNG, of natural gas. Let's take a look at that. Okay, yeah, this is the actual price of natural gas. As you can see, it's been trending higher, and it's an all-time high, 9.75. So it's very interesting. Here, I'm going to compare this to the price of Comstock CRK. Let's look at that. That's going to give us the price. So, interestingly enough, as the price of natural gas goes up, the price of CRK goes up as well. I'm also going to compare it to a company that I have added to today, Range Resources, RRC. That's a Fort Worth based. RRC isn't quite as is quite as robust as Comstock Resources. So both are quite interesting stocks as well. All right, let's go to ET up. What do you prefer? Good question. Energy ET versus Energy Transfer Partners, and this is by the way, ET owns about half Sunoco. That's a company in the oil business, of course. Not many. This is Energy Transfer Partners. This has been a very good stock, by the way. But let's compare them. I like HE a lot. And EPD, let's look at this is also energy products, kind of two heads of the same, same thing here. So here's ET, and then let's compare it to EPD, which is Energy Project. And you can't really see it here. Energy Transfer Partners has outperformed it just slightly. So if I'm looking at both of these, I would have to give the I would have to ET is my favorite. So ET is the one that I would recommend over EP and over Energy Transfer Partners is the one that I think is the one I think you want. So definitely something to take a look at. All right, let's go to let's look at Palo Alto Networks. That had a huge jump. Very excellent numbers in terms of their numbers today. They just came through earnings, and just tremendous in terms of in the after hours. I don't know if you can see this. Hopefully you'll be able to see this. Yep, there we go. The after hours way up 8.56%. They definitely go away their numbers, and very, very good. Would I buy it here? No. And the reason I wouldn't buy it, I'll tell you why. It's below that 200-day moving average. And even though the earnings were up 49%, and I do believe that this was I do believe that this was a short squeeze that went on here. That's the reason I think it did go up so much after hours. I think there's a lot of people who are going to have to cover. I think a lot of people were expecting a further a drop. There was a lot of selling right at the bell on this one. But I don't think this is due to the market, because I do think that the market is probably for it. So I think this was a short squeeze. People are getting ready because tomorrow they're going to have to cover, and they're trying to borrow or buy shares to cover their position. So my viewpoint on this one is that they had Palo Alto Networks had better numbers than expected, but I think that there's a short squeeze on this one. So I would not be in this one just because of it. But that's kind of my take on Palo Alto Network today. It's kind of that's sort of the long and short of it. All right. Tesla. How's it right now? Yeah, it was very strong, very, very strong here, Drunk. Very, very strong. I mean, we got like a bunch of inches, which is great because finally got rain in my house. It's just been, I have a brown front yard, and so now it's great that I've gotten all this rain, which has really, really helped. Let's look at Tesla. Tesla, of course, if you've been following me, I did sell my position in Tesla on the day of record, and this is typically, and it's fallen from there since. I currently the price of Tesla is $269 after hours. I sold mine at $915. Basically, that was on the day of record for the stock. I do expect some more downward trend here. I suspect it to pull back probably to a little bit above 600. I think about 605. That's what I'm looking for. I'm currently out of the stock here, and just trying to wait for the right. Oh, okay. My mistake. Palo Alto Networks announced the 3-for-1 split. Okay, so I misspoke there. Thank you very much for that information. By the way, you can usually make money on a 3-to-1 if you buy it now and then you hold it into the day of record. Then it will run up and then it will move back. So maybe not a bad place to buy Palo Alto Networks. There's probably a little bit of a run there. Maybe, there may be a little bit of a run there. But I really appreciate that, Jeet. Thank you so much for bringing that to everybody's attention. That's very interesting. Let's take a look at SoFi. Of course, this one was a high flyer. I don't know. Some of the fintech companies have been really having a lot of trouble as of late. Unfortunately, I'm not a great bottom fisher. That's not my area of expertise. Typically, don't like buying anything below that 200-day moving average. Of course, it's below that. Relative strength of 8. That means that 92% of all the stocks currently trading are stronger than SoFi right now. So not very good. You have the death cross on it. So I probably would not be a buyer here. I'd stay out of it. There's a lot of selling, as you can see, coming into it. And what this line here, of course, this is average daily volume. So there's been a lot of selling volume on this one. I think the best thing with SoFi, maybe you can do a bottom fishing, but I think you just have to avoid it. Just because I just don't like to buy stocks in decline. I like to buy always as stocks are moving higher to higher highs and not when they're declining. Now, there are some people that can buy stuff off the bottom that are tremendous, but I'm not one of them, so I would not be a buyer of this one, so I'd avoid it. And it's disappointing because there's last year there were so many things to buy in terms of tech stocks. This year has been a terrible year for tech stocks. And so it's just, I like trading the tech stocks better, believe me, I do. But right now, you just got to be careful. Okay, GING. Let's get that. So let's go to GING. So what's going on there? Well, it's not coming up. That's what's not coming on there. Let's go next question from TikTok. Thank you very, very much. The XLE. This is one of my faves. The XLE, for everyone out there that doesn't know what this is the Energy Select Spider. There's 11 different spiders for different sectors of the economy. And this one covers energy. So it's a good proxy on the overall energy market. I do think that it's primarily, the interesting thing about this one, this is primarily Exxon and Chevron. So those two stocks dominate this spider. But it's moving higher, and it's above that 200-day moving average. So I definitely think that this is something where you could possibly, be starting to build a position, actually. I'm drawing a reversal line here. Definitely is reversing higher. It's now above the 50-day moving average with a relative strength of 94, making it in the top 6% of current issues out there. We also have a relative strength line that is strengthening, whereas the S&P is going down. So this is looking very good. And do you think it will be near 85? Well, I can't say if it's going to be near 85. You never can tell, obviously. But yes, I do think it is going to be moving up towards 85. I think that's very likely. And so I think that, if you're in the XLE, I think you can build a position. Now, I wouldn't be in any more than about a half a position here, but a half a position would make sense on the XLE. I'm, as you can tell, I'm bullish energy right now in the market. So that's sort of where I am bullish, is in the energy area, because it's the one area of the market that in a downward market, trending market, is doing well. So that's kind of a good thing. All right, Palo Alto Network. I'm scared to do any type of spreads, so I don't have to cover it. Okay. Well, the interesting thing, if you do a spread, and I'll probably, I'm going to be putting up some videos on this one. That's a very, very good question, by the way. With a spread, because you're buying the upper and the lower at the same time, you don't have to cover, because the lower one covers for the other one, so you're automatically covered. I've been holding two spreads. Actually, I have a spread on Snowflake. It's doing well now. The spread that I should be doing better on is Cloudflare. It's not doing that well, but no, you can stay tuned for some of my little tutorials on spreads. Yeah, and the question from TikTok: what's going on with Tesla? Really, what's going on with Tesla is Tesla has what they call overhead supply, which means that because people bought it above 900, there's a lot of people that are holding a lot of shares above 900. Now, of course, they're going to split. They're going to split, but every time it gets up close to 900, what happens is they tend to sell this. It's what they call overhead supply, and unfortunately, that's just generally the with Tesla right now. There's a lot of overhead supply above this $900 level. So, as you can see, I'm just drawing the line here. You notice how it just gets above 900 right there, and then immediately it starts to pull down. The reason is people bought it so much higher over here, so they've been waiting for it to move above 900. They're like, well, let's sell it. We'll take a small loss. So anytime it gets up to 900, Tesla does, it gets basically there's downward pressure on the stock, and that's why you have this overhead supply. So right now, Tesla is pre-split is topping out at about $915. So you just really something that I think right now you just got to let it rest. This was a great stock 2 years ago. I made a ton of money on it. As a matter of fact, I was able to pay off my mortgage with this. But right now, it's just dead money, and I don't think you can be in it. It's kind of sad, but it is what it is. So there you go. All right, let's look at three more, and that's it for today, because we're running right up against 45 minutes. VET, this is one of my favorite stocks. This is Vermilion Energy, VET. This is a Canadian oil and gas company, and it's just a very strong company. And it's not, it's not a hugely expensive stock. It's a $26, and currently they're trading at $26.85. This is one that I definitely think that you can buy. It's in the buy zone now, and it's in the top 1% of all stock currently. And I really, really like this one. Again, it's an oil and gas company, primarily in Canada, but they also operate in Australia, Ireland, and Germany, believe it or not. So this is an interesting company for Vermilion Energy, and definitely viable here. Very strong stock in terms of everything. Checklist is 78%, which is excellent. So definitely VET is viable. So I just want to put that up there out there for everybody on this one. This is one of my favorite stocks. I don't own it, but I do like it a lot. So VET is viable. So I just wanted to kind of put that out there for everyone. It's viral right now. So I definitely really like. All right, let's take bear press spread on Ford. I don't. Okay. Let's take a look at two more here, Mr. G. Thank you. BTU. BTU. This is Peabody Energy. This is a coal play, and it's probably one of the biggest it's coming off a double bottom. This is one of the few companies in the coal space that I like because it's one of the few places that's big enough. This is the top 2% of all stocks right now, believe it or not. You wouldn't think that coal would be a good play, but it is. And I think Peabody, if you're going to be in the coal space, and this, by the way, is very strong. It's 31 out of 197 in terms of sectors. So this is coming off a double bottom, so I definitely think this is actionable. Now, I'm not in it. There's a lot of different ways to play this. I'm not in this one. I think some of the oil stocks are a little bit better than this one, but I definitely like this one a lot. So also very good. VET is better bet. And ERF, let's see, that's the last one. ERF. And there we go. Canadian Natural Oil and Gas Company, right in the buy zone. $15. These are obviously very inexpensive stocks because, of course, they're commodity based. 98 relative strength, but believe me, you can double your money on these stocks if you play them right. It's coming right off the 200-day moving average, so I like this one as well. The question is, there's so many good stocks that are in the oil and gas sector in Canada that I think make a lot of sense, and definitely this is definitely one of them. So, but I think VET is a little bit stronger than this one, but I think they're both very good. Well, thank you very much, everybody. I didn't get to everything. Please, always, it really helps me out, of course, and I say this every time. But if you like and subscribe, would be really great. So if you could like this, that would be fantastic. Absolutely fantastic. So please like the show, and also subscribe. And I'll be back tomorrow at 5 o'clock. Thank you much, everybody. Happy trading, and stay safe. Just be really careful. I'm mostly still in cash. I think we're going to see a leg down here, so I would be very careful. Set your stop losses up on your tech stocks because I do think we're going to see a lot of damage in the tech area. But there is one area, of course, that I do think is good, and that is the oil and gas area. So there's definitely things to buy. There's always a place in the market where there is something, and right now that's the oil and gas area, I believe. And so I will be back tomorrow at 5. Happy trading, everybody. Please tell your friends, and I will see you tomorrow.